Bitcoin spot ETFs have seen their highest demand in months. With BTC now trading well above $105,000, ETFs are recording record inflows. This has sparked real hope among investors for another rally, or even new all-time highs. But why exactly is this surge in ETF interest such a bullish signal for the entire crypto market? Welcome to Inside Bitcoins, your daily source for the most important crypto news, analysis, and insights. Today we're diving into the ongoing boom surrounding Bitcoin spot ETFs and what it could mean for the broader market. Just back in April, market sentiment hit a major low. Donald Trump's proposed tariff policy had created significant uncertainty. Analysts warned of an impending trade war, rising inflation, and a potential U.S. recession. In times like these, investors typically flee to safe havens, and Bitcoin, for a moment, lost its shine. Bitcoin dropped to around $75,000, and spot ETF inflows slowed significantly. But over the past 30 days, the picture has completely reversed. Bitcoin surged more than 25%, pushing back above $105,000. At the same time, a flood of capital returned to the ETFs. On May 19th alone, net inflows into Bitcoin spot ETFs hit $667.4 million. A clear sign that institutional players are jumping back in with conviction. The biggest winner, BlackRock's IBIT Spot ETF, which has firmly established itself as the most successful ETF product by a wide margin. Other funds like Fidelity's FBTC and ARK Invest's ARK-B also recorded hundreds of millions in net inflows. Most notably, the total cumulative flow across all Bitcoin ETFs recently hit a new all-time high of over $42.4 billion, surpassing the previous peak from February. What does this mean for the market? Well, simple. Institutional confidence is returning, and that's a huge signal. Unlike many retail traders, institutional investors rely on deep analysis, market intelligence, and sometimes even non-public information. When they start buying Bitcoin en masse again, it usually reflects a strong expectation of continued price gains. That expectation isn't unfounded. The U.S. government under Donald Trump continues to work on establishing a national crypto reserve, which could see the state itself begin purchasing Bitcoin at scale. On a state level, similar plans are already being discussed, and companies like Nvidia are actively exploring adding Bitcoin as a reserve asset to their balance sheets. If those developments materialize, it could trigger a full-blown run on the remaining circulating Bitcoin. After all, BTC supply is capped at 21 million coins, making it fundamentally different from other asset classes. If demand spikes while supply remains fixed, a price explosion becomes all but inevitable. Geopolitical uncertainty is adding more fuel to the fire. Inflation remains high in many developed countries, and trust in fiat currencies like the dollar or euro continues to erode. In this climate, Bitcoin's no longer seen merely as a speculative asset, but increasingly as a digital hedge against currency devaluation. Similar to gold, but decentralized, global, and finite. These ETF inflows may just be the beginning. If trust continues to strengthen, institutional demand could rise further, and that in return would serve as a signal to retail investors. Because when giants like BlackRock or Fidelity start accumulating Bitcoin in the billions, even retail investors start to see long-term potential in the market again. Combined all these factors, rising ETF inflows, state and corporate BTC initiatives, limited supply, global macro uncertainty, and technical momentum, and the signals are pointing towards a potential continuation of Bitcoin's bull run. We could soon see a breakout and possibly even a new all-time high. But what do you think? Are these massive ETF inflows truly the spark for the next big rally? Or just a temporary bounce before the next correction? Let us know in the comments, drop a like, subscribe to Inside Bitcoins, and hit the bell so you don't miss the next big move in crypto.